This is the briefing for Tuesday, November 14th. Well, the news event that occurred this morning and the release of the CPI numbers certainly changed the perception of value on the part of traders and investors. It was certainly an amazing day today, especially since we were really just muted for the last several days. Now, here's the spiders on a daily basis, and you can see that really we were in a rotational pattern for probably about 6-7 days with a slightly upward bias to it. But then after the release of the CPI numbers, the pre-market just exploded higher. And of course, after the open, we opened above the 445 area in the spiders and then continued to move up to the 450. Next level of resistance comes in at 460. And that certainly is achievable for the indices, at least at this point in time. Volume in the ETFs ticked up slightly, so you can see that we're in the process potentially of eliminating the volume divergence that we have seen for quite some time, in fact, since this rally started. So certainly, as I've discussed in previous briefings, when there's a news event, we have to be aware that that news event can certainly change the perception of value, and we can see a complete reversal from what a trend was, at least in the near term. Breadth expanded nicely. We had at one point in time, we had about 90% of the S&P 500 were trading higher as opposed to lower. That's fallen down a little bit. I think it was at the high was at about 440 of the 500 stocks in the S&P 500. So in terms of the S&P, the spiders, this was a strong rally. You can see that 52-week highs minus 52-week lows just really expanded nicely. We were getting close to about negative 400 right in this area here. And that gave me a lot of concern because of the divergence that we were seeing in the internals. And it is a low percentage of time that the internals will correct the price, and the majority of that time it is when there is a news event, and we have just seen it in today's trading. Looking at the NASDAQ, it exploded today. This is the Qs, and the next level of resistance is at 388, 389, and that certainly is achievable. It's only 4 points away. That would be a huge breakout of this area of rotation that goes all the way back to June of this year. So watch that very, very carefully. Volume once again in the Qs ticked up, and breadth expanded nicely as well. So this was a strong rally in today's trading. The Russell, that has been lagging, and you can see the difference in the chart patterns here. The Russell exploded as well, and it held. It's now getting ready to test the 180 area. That's the next upside resistance. Look at the volume in the IWM. That just really, really exploded. There were a lot of buyers in the Russell today. Russell breadth exploded as well. So, you know, if you've listened to these briefings previously, you know that I watch the Russell periodically, or actually I watch it a lot, especially in terms of looking for a potential signal that there's going to be a turn down in the other indices. And certainly the rally we saw in today's trading gave the Russell an impetus that was just very, very strong. This is a strong volume day in the IWM. And you can look back all the way back through here, and we haven't reached that level of volume until going all the way back to March 17th of this year. So this was a strong day in terms of the stock indices, in terms of the internals as well. Looking at where we are in terms of overbought and oversold, we're extremely overbought, and that is not a surprise in both the NYSE and in the NASDAQ. The reason for that is that we just had a very strong internal day today, but this does not preclude the market from going higher in tomorrow's trading. Typically, when we see something like that, the strength in the rally that we saw today, there is typically going to be follow through. It would be a pretty negative situation if there was not follow through in tomorrow's trading, especially since we closed near the highs of the day. These two charts here are net volume. That's up volume minus down volume. This is for the NYSE. This is for the NASDAQ. And you can see how much greater there was in up volume as opposed to down volume. And then looking at total volume on the indices, you can see this is NYSE total volume. Really just exploded from yesterday, testing its lower extreme now to testing its upper extreme. And the same thing with the NASDAQ, not quite testing its lower extreme yesterday, but getting ready to test the upper extreme as well. If we look at where we are in terms of the percentage of stocks above their 50 and 200-day moving averages, this is the S&P at almost 67% above the 50-day and 47% above the 200-day. The NASDAQ is running 50% above its 50-day and about 34% above its 200-day. And the Russell exploded once again, about 61% above the 50-day and almost 40% above the 200-day moving average. Now, for tomorrow, I'm going to be a little cautious because of the overbought and oversold reading that we have in the indices, at least for right now. I should say the overbought reading that we have. But the market gave us a short-term area of potentially good trade location, and that is this rotational pattern that we see here on a 15-minute chart. So if there's going to be follow through, we'll see a breakout above this 450 level. Same thing with the Qs above the 386, looks like about 386, 32 or 50 area. So that would give us the indication or give us good trade location in that you can be long above that level with a stop just below it, because if it's going to continue to go, you don't want to see it back in this area of rotation once again. Alternatively, breaking to the downside, because we are at an extreme overbought condition, would suggest some type of potential rotation down to work off that overbought condition. So you'd want to look to be short below about 448 in the spiders and about 384 in the Qs. And once again, you don't want to see that the price back in the middle or back through that lower extreme. If it's going to go in either direction, it needs to go. So there are areas of good trade location for tomorrow's trading that the market has given us. If potentially we see a breakout to the downside, support is going to come in right at the beginning of the gap. So it's going to be about 446 in the spiders, and it's going to be about 383 in the Qs. So watch that area very carefully, because I would doubt, unless there's another news event that we don't anticipate, I would doubt that the indices would have a lot of impetus to trade through this gap. Now, this gap represents just really strong buying. When you look at this is just a lot of orders that came in right at the open of the day session and just flooded the market with orders and drove it from about the 440 area where it closed yesterday up to about 446 in the spiders. And the same thing with the Qs closing really right around the 377 area and then opening up at the 384 area, 383, 384 area. So that's convictive buying. If those buyers that bought that do not defend that, and the way I look at it is that if it's about a 50% retracement, it's going to get completely retraced. I would be shocked to see a 50% retracement in tomorrow's trading because of the strength of what we saw in today's trading. But once again, there was a news event that drove it today. If there's another news event tomorrow, we could see this thing completely retraced. But we do have good areas of trade location for tomorrow, at least in the short term, and then just watch what happens on a continuation of a breakout to the support levels that I've outlined and the resistance levels as well. Have a great night, and I'll pick this back up again tomorrow. It will be a very interesting day tomorrow to see if there is going to be additional follow-through that we saw through today. Have a great night.